Hi, and welcome back. I'm Ted Thomas. This episode is all about how do tax deed sales work in Florida. So I'm going to explain that, a bunch of other things as I go along. We'll talk about tax deeds. I'll teach you a little bit about profits and tax lien certificates. One thing I do want to make sure that you hang in for the whole video and watch the very end, because I'm going to tell you about two key mistakes that people make at the auctions. And newbies make this mistake and experienced people do it. And you want to avoid these mistakes because they could cost you $25,000, $50,000. I've seen people ruin $100,000 very quickly by making these two mistakes. So stay tuned, I'll come right back. How do tax deed sales work in Florida? Well, they're going to work much the same in a lot of states, but let's go through the process. Now, this is a very lucrative business. It's little known, but it makes big profits. And why does it make big profits? Because a tax deed sale took place because the county confiscated a property, then they wiped out the mortgage, and then they put it back into the marketplace to get it sold because they want that revenue to pay the county's bills. So let me go through the process. The legislature instructs the treasurer of every county to levy taxes, collect taxes, and if you can't collect the taxes, confiscate, seize the property, sell the property, and whatever revenue you bring in, pay the taxes. So let's go through that process. You've gone to the auction, you want to buy this property. Now this is going to be a lucrative property because you're going to be able to get it, hopefully, for 10, 20, or 30 cents on the dollar. I've seen people get them for 5 and 7 cents on the dollar. I've seen people pay 95 cents on the dollar. You don't want to be in the category of the 95 because you're not going to be able to sell it. It's going to be kind of a problem. So tax liens and tax deeds have been around for 200 years. I didn't invent the system. The counties and the states got together and invented the system 200 years ago. Tax liens and tax deeds have been available for over 200 years, and they're in 3,000 counties. Half of the counties sell tax lien certificates. The others half are going to sell tax defaulted property. Now, every property in the county must pay a property tax. If they don't pay a tax, they're going to be in the situation we're talking about now. The county's levied a tax, it hasn't been paid, now the county's going to collect. So how do they collect? Well, they seize the property, they put it out to auction. Any bidder can buy it. The bids start low, okay? They're going to start right at the back taxes, so very close. Whatever the highest bidder wants to pay, that's what it will be sold for. Now, before I go any further, let me know if you live in a different state and you want to know what the tax lien percentage is in your state. But meanwhile, episode we're covering today is how do tax deed sales work in Florida? All right, now the average person doesn't realize that these auctions have to take place for a reason. The reason the auction is taking place is that the county needs money. Now, what does the county need money for? Well, they have to pay county employees, they have to pay for the sheriff, they have to pay police, they have to pay firefighters, you're getting the idea. Someone's got to pay the school teachers. So the county has a lot of bills. Most people haven't even thought about those bills, but they're always there. So all of the counties across the United States are going to levy taxes and collect taxes. What we're talking about now is buying a property at that tax defaulted auction, and now you want to resell it. So you want to resell it as low as possible in my mind. So I say, don't buy it low and try to sell it high. These are B, C, and D properties, so they're a little bit used and abused. If you want to go fix them up, go ahead. I tell people not to fix them. I buy them low and I sell them low. Now let me give you an example of that. If it's a $100,000 property, I'm going to try to get it for 20 cents on the dollar. I don't always get them for 20 cents on the dollar. Sometimes I get them for less, sometimes a little more. But I buy it low. If I bought it for 20 cents on the dollar, I'm probably going to sell it for 40 or 50 cents on the dollar. Why? Because I want it to happen fast. Why do I want it to happen fast? Because there's a lot of auctions. I mean, a lot. 5,000 auctions across the United States every year. So 2 to 3% of all properties in the United States will go to some kind of tax defaulted auction. So think about that. So there's plenty for everybody. There's going to be lots of business. All right, so let's think about how much these back taxes are. In the normal states, the tax is going to be 1 or 2% of value each year. So let's use a value of $150,000. 1% means the tax is $1,500. So let's say the property's 2 years in default. So now $3,000 in taxes is owed. All right, and there's going to be some penalties in there. So let's say the property's coming up for $4,000. You probably won't get it for $4,000. But 20 cents on the dollar would be nice. If it was 100,000, you'd have $20,000 investment. The point is, you want to buy it low and then you want to sell it low. Now the county doesn't want this property. So the county is not going to push the bids up. If they hire a professional auctioneer, they'll try to push it up. The county wants to collect the back taxes. They're obligated to collect the back taxes if they can do it, and they'll certainly try. So if you want to buy at one of these auctions, you need to study and be prepared. You don't want to go in and start guessing, and you want to buy at the property at the lowest price possible. Yes, I have students buying them under 10 cents on the dollar, but I will tell you, most auctions you're going to buy for 20 and 30 cents on the dollar. Most auctions, you're probably not going to get the A properties, okay? If you're buying tax lien certificates, you want to buy the A properties. If you're trying to buy tax defaulted properties, resell them for profits, and there's huge profits to be made, I'm going to suggest that you buy those properties 20, 30 cents on the dollar and sell them at 50 cents on the dollar or less. Why? Because there's a big market out there for people that want to do fixer-uppers and things like that. Every night on television, there's someone say, buy these properties and fix them. How about if you sell the property to them? Let them fix it. You go on and make your profit. All right, so properties are sold without a mortgage. I need to stress that. When an auction takes place, tax lien auction or a tax deed auction, whatever it takes place, there's no mortgage on the property. The local government wiped out the mortgage. That doesn't mean they tore it up. They just moved it off the property by law. That's the law in every state and every county. They moved the mortgage off the property. But the signatory, the person that signed that promissory note, which is a mortgage, when they signed that, they still owe it. So that they're not getting away with that. So that's pretty much how you buy tax deeds in Florida and resell them. So buy them low, sell them low, and go to the bank. That's the name of the game.
Ted, how soon before the auction should I do my due diligence?
If you're going to buy auction properties, you don't want to do it a month and a half in advance, because what will happen is some of those properties will actually, people will go in and pay the taxes. Some of those properties will get damaged. By that I mean, there could be a hurricane, there could be a fire, all kinds of things could happen to these properties. So I would do all my due diligence within the last week or two. I would not buy a property I hadn't seen. Let me say that again. I would not buy a property I hadn't seen, or I had someone go look at it for me. So the key there is have boots on the ground or eyes on the property, or don't buy it. That would be my advice.
Ted, in Florida, can I buy properties over the counter?
We haven't talked about it, but the question was, can you buy over the counter? Absolutely. If a property isn't sold at auction, they'll probably put it in the auction the next time. If it doesn't sell then, they'll put it on a separate list. Now, they don't advertise the separate list, but now you hear, so you might as well get some inside secrets. The separate list could be called surplus lands, could be called leftover, it could be called strike-off list. It could be called forfeited lands available. They could have any one of 20 names for that property. I don't know what your county, but it's the properties that didn't sell at auction. Those properties are actually sold by going to the county either online or physically, and we use the term, which we created 25 years ago, over the counter. So that simply means when you went into the county, you'd walk in, they might have a big desk there, and the assistant that's working for the treasurer, you could say, well, I want to buy properties that are left over. If you go in and say, I want to buy surplus, it might say they don't have any surplus. So you have to know the name. So look that up on the county records, what they call it. But those properties are surplus. Like in Chicago, you have to say, I want to find out about the scavenger list. Now, that sounds pretty ugly, doesn't it? So I don't know what they're going to call it in the county, but they will have leftover properties. And I can assure you that there's leftover properties in every county. Now, I've been teaching this for a while, so a few people know about this, because in my coaching sessions and in my advanced course, I teach people how to buy these properties, because there's no bidding. So anybody that's asking about the over-counter really knows a little bit about it. So if you go to buy over the counter, there's no bid. They say, here's the minimum price, and that's what you pay. So you don't have any bidders.